Hello, friends. Let's start with today's topic, which is on consumer finance. Uh, we need to start this topic looking into the current context, which is like we are actually shifting from, we are drastically shifting from what traditionally we were following and what we are supposed to see in coming times. Hence, this is something quoted by one of an expert. We are living through a period of profound changes which affects all of us. What it means, ki, like things which were done traditionally in a particular manner, they are changing now totally all together. So India being an economy where saving was the first priority of every family, every household, but now things are changing very fast. In order to have a better standard of living, now the new product which is there in market is consumer finance. This consumer finance is nothing but it is small finance which is meant for like your upgrading your lifestyle, day-to-day lifestyle, like bringing in an AC, fridge, TV, mobile phone, or various other things. So you see, when you have these items, which are very easily accessible due to consume this concept of consumer finance, you see consumers, the people at large, they are having a better standard of living. These are some of the companies which are mentioned here: Bajaj Finserv, City Financial, GE Money. Okay, they are actually service providers in this sector. uh, if we need to understand the definition of consumer finance, it is nothing but you see what you're trying to do is like you're borrowing, saving, and then making investment choice that affects a person over a period of time. In this, what you're getting is like you are able to get assistance in your financial decisions. Like you would like to borrow something, and that too in like where repayment can be done in periodic installments. So these financial decisions are usually very complex and can affect one person's financial well-being. So when it is consumer finance helping you with your as a source of financing, in some of your challenges have been sorted out by this term. But you see, if we look into consumer finance, this term is not fit in into Indian traditional mindset. There, people were supposed to consume later, but they have to save something for the same first. So after saving, after you're ready to buy that thing, and you have your capacity to buy it, then only they were going for consumption. But now pattern has changed. It is mainly a Western factor which is influencing our market now. So when you have a facility to borrow easy at easy rates, sometimes it is 0% finance. So you see, consumer is always given a provocation, and in line to the same consumers are actually using this service like anything. What is important to discuss in this? Any consumer is consumer finance a good option in order to maintain liquidity? Liquidity means short-term repayment capacity of a person. Okay, so then next thing that comes to your mind with this topic is like, can we fulfill the requirements which are there must for borrowing under this category of consumer finance? And it includes your CIBIL score, it includes your documentation, it includes the prerequisites that are must. And then last is like, uh, how consumer finance helps you to make your portfolio. So this portfolio means what assets can you hold? Is consumer finance has any implication on the same? So we'll try to cover consumer finance, importance of the same, various options which are available, and benefits of consumer finance to an individual. So these are the topics which are going to be covered in this lecture. So let's start with the definition. That the term consumer finance refers to activities which are involved in granting credit to consumer to enable them to possess some goods meant for their daily usage, everyday usage. Okay, so this is the conventional definition of consumer finance, and it includes the procedure through which consumer is able to purchase these semi-durable and durable goods other than real estate. Means real estate will not be a part of consumer finance. Okay, because it is a term loan which will be including around 15 to 20 years of period for repayment. So it is usually considered under term loan. And whereas you see, consumer finance is a short term loan where you take a loan, let's say you buy a laptop and you have to pay it in next 12 months in equal installments. Okay, so 12 months is usually the maximum tenure. So, but when you go by definition, it can be between 3 months to 5 years. So, usually you see 5 year is they are mentioned in books, but most of your loans will be having a shorter tenure than less than 1 year. You see what type of consumer credit do you have? It can be of two types. One is revolving and second is fixed. What is revolving? Revolving means which is on rotation basis. Okay. So like a credit card, you have been given a limit of, let's say, 50,000 rupee in your credit card. You see, how to set limit is another area of discussion. But let's say, we are just assuming it that based on the credibility, based on the repayment capacity, based on past track record, you have been given a limit of 50,000 rupee. And when you're going to use this limit, it is like you have to repay within 45 days. If it is made within 45 days, no charges, nothing. But if it is delayed and then is not able to be paid in for first 45 days, then heavy penalty will come. Now what is happening here is like you buy something and you use credit card to make a payment for it. So you have borrowed through credit card, but you have to repay it. And once you repay it in first 45 days, this limit is still available to you. You can use it infinite number of times. The only thing is like you have to clear it within the specified timeline. Okay, that's why this is called as revolving credit. Second is like fixed term, where you see you borrow it and then you have to repay it in fixed monthly installments. Okay, you pay it in regular installments, and then time period is very particular. The credit has to be repaid within that period only. You see, in revolving credit, the issue is like you take it now, you can pay it tomorrow. Tenure is 45 days. But here you see this tenure may be a little bit longer. Fixed credit means monthly repayments, weekly repayments, fortnightly repayments. So you have a schedule, but there is no such schedule in credit cards. Okay. So let's proceed for the cash loan. What is a cash loan? Cash loan is like you see again this type of facility. Banks are giving money to consumer. Let's say you would like to do, like take an example of a personal loan. So in personal loan, the consumer is willing to buy something, or he is using this money for some unexplained like project which bankers are not interested in knowing. But now you see, because this project is somewhat confidential, hence borrower is also not comfortable sharing the details, so it is okay, no problem. So personal loan can be put into the same category of cash loan, where you see we are going to give you money to do something, but these loans are a little bit costly in nature because we don't know your purpose, hence extra cost will be involved. Next is like you have secured finance. Now what is secured finance? Any loan where you have a security in place. Let's say if I gave you 10,000 rupee and you don't repay it back to me, I have asked you for some security or collateral while you're taking this loan. And you see, if you're not going to pay my loan on due date, I am free to sell your security in open market. Let's say you have given me some gold jewelry as a security. So if you don't turn up on the day when you are supposed to clear your dues, I'm free to sell it to any gold jewelry shop and recover my money. Okay. So if you have a security and this security is having some realizable value, so in that case, this is called as a secured loan. Secured loan means where 100% of your loan amount is secured against a collateral. And usually you see in banks, bank never give you loan without security. Either they need a security or they need a guarantor. But here, point is, in order to be fully secured, let's say loan value is 10 lakhs, I'm going to expect 12 to 15 lakh rupee of collateral. So I'm always going to keep somewhat extra collaterals so as to meet emergency situations. Okay, let's say I'm not able to recover it. So my principal amount, which is 10 lakh plus some interest, will also be there. So I have to cover my interest also. Okay, so my collaterals will be like having some margin, like some extra cushion, so as to meet with some emergency situation. The collateral may be in the form of personal property, can be real estate, can be any other liquid asset too. Okay. Now, unsecured loan, what is unsecured? If you see the picture at the bottom, what they are mentioning, it is no collateral. So, collateral means a security. When loan is given without any security, what it means? It is a house without a lock on it. So, house without lock means there is very high chance that this house will be robbed by robbers. Okay, someone will come and will steal some of the product lying in the house. So, it is only possible. Any default is very probable in a loan where it is unsecured. Unsecured means no security is involved. Hope you are clear on this. Now, what are the various sources of consumer finance? You see, you can have directly take your loan. Yani, what you are doing is you simply go to a businessman who is actually dealing in fridge, TV, or something. You discuss it with them. They'll give you their product on credit. Now, what is this? You don't need a intermediary. You don't need a bank. You don't need a non-banking financial company. Directly, trader is giving you some facility of credit, looking into your past track record. Okay, so this is one. Second is commercial banks. Yes, banks are into it. You need a personal loan. You need any other type of loan, you can always approach a bank. They are the right person. They are into organized sector, so they'll charge you the less amount of interest. Whereas you see their documentation is sometimes a little bit tough. Let's go to the next agency, which is credit card institutions. Now you see credit card institutions. Who are they? They are no in India. They are simply the banks. Like you see, you have HDFC Bank who is issuing you at least 5 to 7 types of different credit cards. Similarly, SBI comes into picture, and then ICICI. If you try to search credit card institutions on net, you'll find these banks only. So commercial bank is again getting replicated with credit card institutions which are issuing it. Okay, I'm not asking here. I'm not telling you something on the companies which are creating these credit cards, these plastic instruments like Visa, Mestro. Huh? So these are not the they are not into the context of discussion. So credit card institution means the institution which are allowing their clients to have credit card. Okay, so it is banks mainly. Then we have non-banking financial companies on NBFCs. You see the names that we have seen in the start, like G Capital. You have City Financial, Bajaj Finserv. What are they? They are non-banking financial companies. They are not banks, but they are into the business of finance. Hence, they are coming under non-banking financial companies. Then you have credit unions too. Okay, so this concept is not very popular in India, but when you go to developed Western side, there you'll find these credit unions very active. Let's go forward. Now, if you look into this is old data, but it will give you a true picture that how you see this is for financial year 2019. It is telling you what is the proportion of total retail loans actually being exposed by different financial service providers. So public sector banks having around you see 39%, whereas in consumer finance you see whereas private sector banks have 37, NBFCs have 18, and others to have 6%. You see this is what is their stake. Okay, and year to year you see there can be a shift. Like NBFCs are very active in retail home, you see, retail home private banks only 19%, whereas NBFCs are 41%. Public sector banks also 38%. So it tells you how different types of institutions are taking their interest in different types of loan. Okay, retail business again NBFCs are very aggressive. Agriculture sector you see public sector banks only very active, and then total retail. Let's say consider all these retail into one segment altogether, merge them all into one, so you'll find that public sector banks are holding around 39%, private banks are holding around 26%, non-banking financial companies are holding 30%. Yani they are very aggressive. NBFCs are very aggressive. Okay, you can see there is something written as two new credit customers by volume. In the bottom, this is written. What is new credit customers? So these are those customers who are new to this market of this word of credit. Okay, they have never ever in past taken any loan, so they are fresh customers. Let's say students are doing their graduation, so after graduation they will be getting their first job. Okay, this is the same lot. They are the consumers with no exposure, previous exposure to the word of credit. Okay, no new to credit is a very excellent segment. They are very young people. If you catch them early, they'll be staying loyal to you throughout their life. Very good. Chali. Here also you see NBFCs are very aggressively playing their role. You see public sector bank only 13, private banks 24, and 56 is what is NBFC doing. Again, go to the other side of the picture, you'll find again by value. One is volume and second is value. Volume is how many number of cases are you doing, number of clients. Okay, but when it is per client, some monetary transaction value is involved. So value is the amount of monetary transaction. So there also you will find NBFC is leading this comparison. So let's go forward. Now, what are the different modes of consumer finance? You can open an account where you can buy certain products like up to a certain limit. Point is, you have been given a limit. Let's say me or my wife got a credit card or this purchasing card facility from City Financial. Now they'll tell us your eligibility is 2.5 lakhs. I can buy any product or any number of product, but the total amount should not exceed 2.5 lakhs because this is our eligible amount. Okay, so you see they are giving you this limit, certain value for which you can do purchasing. It can be in 1 month, you can do it across months. You can do it only for one product. Let's say you buy an AC for 2.5 lakh, or it can be 10 AC for 2.5 lakh, because you have to use your amount available to you in your account. Okay, as per your eligibility, it varies from person to person. Second type is credit card, which is the very popular mode of finance. Everyone nowadays do have a credit card, and some of the people do have credit card from multiple companies. Okay, because you do earn loyalty points. You got some reward points. So I've seen people who are very young, who are very dynamic, who are very calculative in their approach. They use credit card as a mode of usage, and then on every usage they are getting some reward points. Now, revolving account, again, it is like what is this? We have already discussed. Like you buy something, and then once you clear it, once you repay the dues, again you are ready to take second loan. So there is no problem that you have availed it once, you cannot avail it again. So after repayment, your eligibility still stands, and then you can go for again second, third, fourth, fifth, likewise. Okay. Then you have option plan. Option plan means you have, like, in this consumer finance system, you can pay everything in full up. Yani, what I'm saying is, like, let's say you have bought something, and for repayment you have decided a 2-year plan. So now from somewhere you got some cash flows, and you don't want to keep this loan outstanding, and you want to make a prepayment. So prepayment is all allowed. You can pay full and final settlement, you can do, or you can do part payment also. Okay, sometimes companies do charge some penalty for this prepayment. Let's go to the next point, which is installment account. Equal periodic installments are fixed. So you can pay it in lump sum, you can pay it in installments too. So it depends. So what type of facility are you going to do? Cash loan is like you made the purchase through cash, and payment is made periodically. Yani, you see, uh, what you are doing is like you are going to an ATM, you're withdrawing cash from that card, and once you get that cash, you are using it for any purpose that you want. And you see, this is a type of cash loan where installments are to be paid regularly. So everywhere, you see, these are the different modes through which we can do. Now, what are the factors in Indian context which are giving a like what future we do have in consumer finance? You see, these factors are very motivating. Increase in consumers' disposable income. Disposable income means salaries are increasing. You see, companies are doing good post COVID. After COVID means you see disposable income. Every family with multiple people working nowadays. Now you see disposable income of family is going up. So when it is going up means there is a scope that they may use it for consumption. So whenever it is consumption, so we'll can see consumer finance coming into action. Next is like enhancement in real income of consumers. So you see, because income is increasing, and that too, you see, buying power of your borrowers is increasing. So you see, again, it gives a positive indication. When customer is ready and is actually having the capacity to buy it, so you can bring in more products, better products, high value products into market, into this particular segment of consumer finance. Okay, so you see, this is all good. Convenient size of installment payment means, you see, you can reset your payment schedules according to your capacity, financial capacity. Let's say you're getting 50,000 rupee, you have set some monthly installment of 5,000 rupee for repayment. After a couple of months, your installment value means you would like to increase your installment value. Why? Because you got an increment. So you see, it is very convenient. You simply can approach to your service provider, and they will reschedule your installments in line to your requirement. Okay, so you can clear it early, or you can delay it. Due to COVID, many companies have to restructure their installment amounts. So it is very flexible system. Growth in nuclear families. Nowadays you see, husband, wife, they are all alone. They are not no more staying with their families together, means parents, grandparents. So when you're living into a nuclear family, there is a chance that you see, consumer finance is what is going to be there widely used. Traditionally, if you have to buy something, you have to get approval from so many family members. But nowadays, because you are staying alone, far from your family members, so if you need something, you don't need to go through that rigorous decision making process of whether to buy or not. So it is like, what I feel is like is promoting consumption. So next is like charges are lower because sometimes you don't have processing charge. Sometimes it is like zero interest like charge. So this is only to motivate consumers to go for it. Down payment and credit contracts are there. Now, what type of products are covered? If you see in the bottom, you'll find LEDs, smartphones, refrigerator, AC, any type of fashion material, furnitures, microwave, oven, sofas, anything and everything is coming under this domain of consumer finance. You see, most of them they are fast-moving consumer goods with, like you see, short-term as well as long-term durability. So it is actually helping consumer to have a better standard of living. Now, what are the terms of finance? You see, these are a couple of things which need to be there in the mind of the, like, you see, someone who is buying it as well as someone who is selling it. So, eligibility criteria, can it be given to anyone and everyone? No, it has to have certain eligibility criteria. Like, if I'm going to buy something, I have to make regular repayments. Whether these regular repayments will be affecting my, like, my overall income, net take home pay or not. So, am I able to pay it? So these things have to be taken into consideration. Okay. Next is like guarantee. Do you need a guarantor or not? If you see the person is getting good salary, you don't need guarantee. But if the person is not getting good salaries on time, then it is like guarantee which is required. Tenure is usually short term, but it can go up to 5 years. Rate of interest, again, it varies. It varies means for short term projects, usually rate of interest is on a higher side. For long term project, it is for on a lesser side. So we'll see to it later. Now you see this is one screenshot from Bajaj Finserv. So what they're offering is like they're offering a card with having a limit of approximately 2 lakh rupee. They're simply on their website. You go put up your phone number, register. They are charging you only rupees 530. So they must be doing some credit appraisal before they sanction you this thing, and then sanctioning time period is only 30 seconds. So you see they'll in within 30 seconds it is not possible manually. It is through artificial intelligence and using data analytics. They are able to scan your profile and able to give you this thing totally digitally. Means you need not to visit any of their branch. So card activation will be done instantly. There are so many people who are using it, and then you don't have any cost for your EMIs. Means no extra cost up to 12 months of repayment, which is your tenure of repayment allowed, and then you can be covered for 30,000 places. What it means ki, like you see their coverage is wide. You can use these cards anywhere, anytime. What are the advantages of consumer finance? You can enjoy your position. Means you let's say you need to buy something. You have your cash. No doubt you do have your cash or saving from your salary, but you still need not to spend that money for your buying. Okay, you can simply use consumer finance and can avail the facility without doing a lump sum down payment. Okay, second is like it will enable you to save. We need not to pay anything upfront, so it is through installments we are going to pay. So if you are getting some like let's say some sort of maturity value from FD or something, you need not to invest here. So this money can be kept further again into some sort of investment mode. So it is very convenient. People can restructure their installments as per their change in salary structure. Meeting emergencies. Sometimes we do have a credit card, and let's say salary is already exhausted. This is 10th of your month. Salary came on 30th, and in first 10 days you lost your salary. And you have cleared all your dues. Now something from somewhere emergency strikes. Let's say a medical emergency, hospitalization due to COVID or something. So in such situation, if you don't have a credit card, it is sometimes very like very awkward to arrange money from some relatives and friends. So if you have a credit card, even though you don't use it regularly, but if it is already there in your pocket, you can use it anytime and meet these emergency situations. Maximization of revenues. You see, for businessman, let's say I'm selling one unit on cash, but if I'm giving credit facility or something under consumer finance category, you see what I'm able to do is like instead of one, I'm able to sell 10 units, 9 on credit. So this will help me to maximize my returns, okay, my revenues. So it helps in industrial investments. Why? Because when consumption is going up, so due to consumption, production has to be done accordingly. And production enhancement means it is only possible when you invest in your existing infrastructure. So enhanced living standard, we already discussed it a couple of times in this slide. And finally, overall economic development is boosted because of this. Now, some of the limitations or disadvantages of consumer finance. You see, people once they have it, a tendency of buying things without paying them upfront is like they may go for thoughtless buying. Any people are so careless using their credit cards, and sometimes this credit card will be a heavy burden for repayment. Okay, so if you are not able to pay it on time, it may lead to insolvency, and your CIBIL score will go down drastically. You're not able to make effective repayments. It is because of your casual behavior. Okay, sometimes this cost credit is very costly. You see, for first 45 days in case of credit card, no charge. But after 45 days, you see, they'll charge you penal interest. Penal interest means very heavy. So that means like first 45 days is free, but 46th day is a very costly thing. So you see, sometimes this may also be very, very costly. Risk to trader, you see, when you are giving it, usually traders in this consumer finance, what is happening is traders are going to have a tie-up with financiers for their sale that they are doing it to their clients. For the clients means people, potential clients who are coming in for inquiry. So these clients are connected to these consumer finance companies by these traders. So sometimes traders are also tend to give guarantee for their clients. But you see, in case of a default, when company is going to get a rejection in terms of recovery, so traders are the ultimate losers in that case. Okay, maybe due to recourse facility which is available to these consumer finance companies, maybe they are able to recover it from traders. Next, artificial boom. What is this? Boom is a period when everything is good, demand is very high. Now, because of this product which we have given it to people, maybe possible that people have started consuming it recklessly, and recklessly means without any thought, thoughtless buying, which we have seen in first point. Maybe it will lead to an artificial boom. So, artificial boom means price rise will be there. It we have seen the same sort of artificial boom in case of real estate crisis in USA. Okay, so that needs to be checked. Bad debt will go up, economic instability will be there when you see your institutions will start failing. Let's say SBI gave loan worth rupee 1 lakh crores, they are not able to recover it. What will be the fate of SBI? SBI will fail. Similarly, other institutions will fail. So, what is this? So, if non repayment is there, and that too on a larger scale, like in a situation of COVID, people were not able to go to offices, they were not getting their salaries, and hence heavy amount of default is there across the sector. So you see that situation may take you to economic instability. Now, some of the sectoral insights you see in this picture, what we are able to see is like credit growth has not been driven by subprime clients. You see here in this picture, we have in the bottom where it is mentioned CIBIL score. So you see CIBIL score 10 to 20%, 20 to 30%. This is classification given. So, if you see this chart closely, you will find people having CIBIL score in 50 to 60% to 80 to 90%. This is the segment with high CIBIL score getting maximum amount of loan exposure. So, you see subprime clients, people with low CIBIL score, they are not actually given the priority. Okay, so this is only telling you about the sectoral insights. Next is like if you see this, you'll again find like the data is no doubt old. It is again related to distribution of consumer credit, especially debt by credit score. One is again credit score is very important. So every client who is supposed to borrow, they should have some CIBIL score. So CIBIL score will define the total amount of loan which is there. Okay, so this is how again another insight is like where split of consumer without and with mortgage is given. Okay, so this is how we can see this is one mandate which is available. Mandate is like when you actually take a consumer finance facility from any service provider, there you see you have to give mandate is like where you give a standing instruction to your banker that every month some fixed amount of installment has to be paid. Okay, you can see this is in the website of City Financial. I've got this instrument. This instrument is nothing but it is actually mandate registration form. You have something UMRN at the top. What is your UMRM? It is unique mandate reference number allocated to each mandate, and it is there in case of NACH debits. Okay, debit means you have to pay it to someone. It is automatically generated by NACH system during mandate registration process. Okay, so you see this is all about your subject. With this, I'll take a break